Let's look at another example to determine do we have a financial asset, liability, or equity. So here we have Lavender Limited, a registered financial services provider. They're subscribed for unlisted redeemable preference shares at a nominal value in cash. The preference shares were issued by Rose Limited. So do you agree that we will be the holder as we've paid an amount and now we have a debit leg to account for, and Rose received our money, so they would have said debit bank, credit then either the liability or equity. So here we have our terms. The issue date was 1 Jan 2015. Preference share capital is 10,000. Our dividends will be 10% payable quarterly. The maturity date will be 31st December 2020. The amount on that date will be 10,000, and this was seen as a contract. So the first requirement is, do the preference shares meet the definition of a financial asset in the records of Lavender Limited, analyzed by applying the definition of a financial asset. So if we look at the solution, we have our definition of a financial asset here. So first of all, will it be cash? No, it only entitles Lavender to cash in the future. So it is not physical cash that they've received as yet. Are the preference shares another entity's equity? Yes, they represent shares in Rose Limited. Therefore, the investment is an investment in another entity's equity. And lastly, do the shares have a contractual right to receive cash or another financial asset? And yes, we will receive 10% dividends per year, receivable quarterly, and the capital amount is also receivable at the end of the term. Therefore, the shares represent a contractual right to receive dividends and capital cash flow. So yes, this will be a financial asset. Number B is stating, do Rose, so does Rose is the issuer, do they have a contractual obligation to deliver cash? And do you agree? Yes. First of all, we have to pay, or Rose Limited has to pay 10% dividends per year payable quarterly. They also have to pay the 10,000 at the end, 31st December 2020. So therefore, the shares actually represents a contractual obligation to pay dividends and capital cash flows. So this is then either financial liability or it can be equity. So we have to consider our substance over legal form. So in solution C, the question was, should Rose classify the preference shares as a liability or cash? We know that we have an obligation to pay certain amounts. So let's look at the legal form of the agreement. The legal form is that the shares provide Lavender with a claim against the net assets of Rose. Also, Lavender will have a preferential right to the dividends over the ordinary shareholders. Remember, this is preference dividends. It is not ordinary dividends. However, we look at substance over legal form. So the substance is that the preference shares cannot be classified as liability and equity. Rose has a contractual obligation to pay Lavender. Remember, they do not have that unconditional right to avoid payment. So therefore, this will be a financial liability in the records of Rose.